Ed Yardeni is with us, President of Yardeni Research. Matt Orton is with us, Chief Market Strategist at RaymondJames Investment Management. Gentlemen, great to have both of you here. We're starting a little early and we went on to a little late because the deal has finally come through. Ed, what do you make of it? And I guess the question to ask is, will this change sentiment in a durable way? Ed, what's your sense?
I think it should. It's a win-win-lose situation where the United States and India are big winners and Russia is a big loser, as it should be, given the horrible war that it's fighting against Ukraine. But this clearly shows that while Modi has gone over to Russia and had discussions with Putin, and he's gone over to Xi, at the end of the day, this is a very powerful economic link between the United States and India. It's very bullish for India's economy, India's stock market, especially since India already got a tremendous deal in its trade with the European Union. So it's been home runs all the way.
Matt, you've been keeping the faith, and I guess patience is eventually rewarded. As I was saying, we were expecting to get the deal first and the best one. I don't know if this is the best one looks like in terms of just purely numerical stuff. At 18% compared to ASEAN, etc. It's a better deal. But of course, late in the day, what do you make of it? FII sentiment more than anything else?
Well, Prashant, it's nice to at least have some good news finally starting to come. And I think it is a meaningful impact, and hopefully it will start to change sentiment around foreign investors, because I think that's been the biggest hurdle when you look at the alternatives to India. You've had incredible runs in South Korea, in China, in Taiwan, largely related to artificial intelligence. And that's one of the key reasons India has been, I'd say, forgotten about on the FII front. This certainly helps. Coming on the heels of the union budget, where perhaps STT maybe wasn't as favorable. But in addition to changing around sentiment, this also, I think, will help provide more long-term visibility into earnings growth for some of the winners that are already going to benefit from the union budget. You look at areas like agriculture, machinery, manufacturing, taking artificial intelligence and building corridors in India. All of those areas are favored under the union budget. I think those are going to continue to benefit as a result of this trade deal too. And as a result of India's tariff now being competitive along with Vietnam, Indonesia, the Philippines, it's going to help make India a key hub of reshoring and moving supply chains away from China. So I think that's going to be critical and should definitely help earnings growth materialize to the extent that foreign investors want and need relative to some of the alternatives across the emerging market complex.
We can see that Dalal Street is seeing green, but look at HDFC ADR and Infosys ADR overnight was up nearly about 4.5%, and that gives you an indication of the way the market will open here. Matt, morning, and thanks for joining in. Now, while you've always liked India, are you incrementally more bullish? Will you look to increase your weightage of India in the portfolio basis this deal?
Yeah, I think it's going to be very idiosyncratic. So I've been very specific, as we've talked about in the past, with respect to my exposures in India and really leaning into long-term high-quality winners. Names like M&M, like we've talked about in the past, this is a clear winner. It's a winner from the budget. It is a winner, especially as you bring back, and have more free trade for parts, components. You look at a name like HCL, that should also be a big winner of both from the union budget as well as this sort of trade deal where you're going to have more artificial intelligence contracts signed. So I think there are some very specific opportunities. But Rima, I think also what could really help close having more improved foreign investor sentiment in India is going to be the RBI this week too. If we can have one more cut and some guidance that we're done for the time being, I think that should help sustain some of the gains that the rupee has had. And if we have stability on the currency front, I think that's going to be absolutely critical for getting foreign investors to actually allocate dollars along with their positive sentiment.
Hi, good morning, gentlemen. It's going to be a big day of trade here in the Indian markets. Matt, two quick questions. Do you think this deal is enough to get those FII flows back? And do you think it's time now for the Indian markets to get back to its outperforming ways? Because the FIIs haven't been there, and India, after a while, was underperforming all global markets.
Yeah, Nigel, I think this should help domestic sentiment as well come back into the market, just given the more challenging run we've had over the past couple of weeks. And this definitely should help on the foreign investor front. Short covering is going to naturally make that happen. And again, if we can have this followed up by the RBI, I think you're going to start to see foreign investors finally say, valuations have reset. India is the fastest growing large economy in the world. We need to have exposure here, especially because this is a consumption driven story. It's not a centralized government policy story like a China. So that's the attractiveness of India. And given the pullback, I would like to think you're going to see more dollars start to come to India.
Ed, we've completely, there was US market trading, but I don't think anyone in India is looking at it. It's the only news which matters is this. What's happened, Ed, last night, and anything notable from price action overnight?
Well, what I see right now, at least for the United States, is the focus has really been on more domestic issues, particularly on the Fed. And we do have a new Fed candidate to run the Fed as the Fed chair, and that's Kevin Warsh. And everybody's scrambling to read what he said in the past. And I think he's basically coming across as a supply sider and a tremendous ally to the administration, because he's all for creating a golden age in the United States. And he sees fiscal and monetary policies cooperating to do that. So I think he does want to lower interest rates. And I think he's going to justify that by reducing the balance sheet of the Federal Reserve. So the outlook is looking increasingly like we're going to have another very bullish year for the global economy. Despite all the tariff frictions and tensions last year, it looks as though things are kind of settling down. And I agree that bringing down India's tariff from 50% to 18% is a great development, and it does make India very competitive with other countries that are increasingly benefiting from manufacturing leaving China and looking for other places to go. Now, I know that China's had a lot of European leaders visiting recently, as well as a Canadian leader, but I think they're just trying to demonstrate that they don't depend on the U.S., where the reality is they very much do depend on the U.S. So I think it's, as I said before, it's a win-win for India and for the United States. I think it's a lose for Russia, and I think it's also a lose for China. China is just not a happy trading partner. They have way too much excess capacity. They're dumping goods all over the world, and so you can do a deal here and there with them, but at the end of the day, it's pretty annoying to have them dump goods into your market and putting your businesses out of business. So again, everybody I think is looking pretty good in this deal.
Ed, did you catch the India budget? There is a tax holiday till 2047 for foreign companies to set up cloud data centers here in India. That's a 21-year tax reprieve. Now, because India was always labeled as anti-AI, and it underperformed many of the emerging markets because it lacked any sort of an AI play, do you think this piece of news surrounding the data center and the tax holiday addresses the anti-AI label when it comes to India?
Yeah, when you're looking at the universe of emerging markets, the best way to play AI has been South Korea and Taiwan. It's no secret. Those stock markets are up significantly. And when you look closer, it's really Samsung in South Korea and it's Taiwan Semi in Taiwan. It doesn't seem to me as though India has yet to see a company like that emerge, or a few companies like that emerge, but it certainly could happen now that India's sort of embracing the concept of data centers and AI.
All right, Ed, I wanted to ask you about gold, because that's been another interesting asset class. You've been bullish all along. If I recall, more than 12, 18 months or so, you've been in the camp that said gold has got more to go, and it's been a splendid outperformer. What's the view on gold from here on? Last couple of trading sessions, it pulled back a little bit. But it seems, between the two precious metals, gold still finds a place. And if you continue to see that shift from the global bond markets to gold, then gold maybe has more legs. What's your take?
Well, I think the sell-off on Friday had a lot to do with the increase in margin requirements in the futures market and the Chicago market. The CME said, well, this is getting a little bit crazy here with silver going straight up, gold's going straight up. We want people to have more margin. They can't leverage it up as much as they had been. The silver and gold prices are really determined in the futures market. That's where all the action is. That's where the trading really is. And that's where the leverage is. And I think the CME did its job of trying to calm things down. And so silver was especially crazy. And so having it go into a one-day bear market with a drop of 30% makes sense, as does the 10% correction in gold. But I'm no expert on silver. I'm not an expert on gold. But I think the world is extremely wealthy and is only going to get wealthier. And as stock markets go up around the world, people want to diversify. And one of the best diversifier for stocks is actually gold. And I think the S&P 500 gets to 10,000 by the end of the year. And as it does, I think they'll be rebalancing into gold. And gold, I still think, goes to 10,000 by the end of the decade, as is the S&P, I should have said, goes to 10,000 by the end of the decade.
Oh, no, absolutely. We'll thank both of you for joining us bright and early here for us, and we'll come back to you and keep discussing the mood as it turns and track it with both of you. Once again, appreciate your time here on CNBC.